Sam here, and I'll be doing the Insights video for Friday, August 7th, 2026. So, just finished making the premium video for the folks in the Mastering the Trade room, and we heavily focused on a new thing that I'm going to show you here in just a second, because it allows me to show you, dare I say, 100 more things at the same time, and then we can kind of get our bearings, and then go and look at them on the charts to execute, right? And that's really kind of important. So I want to just touch on a couple things here for you guys, and just kind of like the maybe three main bullet points from the premium video. The first bullet point is that the SPY here looks great, right? You had a very nice, breakout here that might have trapped a few folks, right? It happened in a very unusual way with the Leopold guy. Last week's video was titled "The Leopold Low," and boy was it. So, you had that dynamic. You had the war dynamic. You've got some pretty good tech earnings lately. So, lots of interesting dynamics there that might have created a little bit of a trap for anyone who would have been short inside that triangle. Aside from that, I think everything here is just kind of speaking for itself. It all looks pretty good. It has gotten to its first target. There is a secondary target here that I have, and it's a little bit of a zone. It's from 787 to about 792. I would probably trust 787 a little bit more. That is a Fibonacci extension target. So that's what's going on SPY, right? And I think it's, for now, given the scores, relatively straightforward. Let me show you this. So a couple of things here on the list. So this is just for those of you that are unfamiliar with this is, so you'll be familiar going forward. This is the sector scoreboard for the market here. This is all the squeezes, all the scores, pretty much every stock, everything I could possibly want, including commodities, credit, currencies, and even crypto, although I never look at it. So what this does is it feeds these scores, right? All these scores, all these squeezes, it feeds them into this thing. And then this thing that has logic built into it that it knows, okay, these things connect, right? Chips and semiconductors and, the AI trade, right? So it'll connect the dots and put it together. And there was one thing that it pointed out that I thought was interesting. So I'll kind of leave this up. If you want to pause the video, you can read it if you care to, right? I'm not going to read it for you. It's a lot of stuff. I do suggest you potentially, if you have the time to read this here, so I'll just leave it up for a second. Also, I would read the rest of this, so I'll leave this up for a second. And then lastly, what I want to show you is actually way down here. It's the very last thing, funny enough. So when everything looks great, I'm always just looking for problems, right? Like what's going to be the problem here, right? Because it's easy to see that it looks good, but then oftentimes it can kind of lull you to sleep. So here's the thing that stood out to me. Credit is not confirming the equity rally the way that it should. HYG, which is junk bonds and a measure of risk taking, has bounced, but investment grade LQD is deeply negative. The gap between junk and quality is worth watching if equities keep pushing. Credit usually leads, but right now it's not fully on board. So that's point one. And then lastly, on this sheet, I did miss one thing that I wanted to show you, which is the vol read. The vol read for now, I'll leave it for another time. All right, so let me just be as clear as I can, because I want to, remove all ambiguity. The market looks great. Peripheral markets look great. There's some things that could look better, but they all look very good and serviceable. The two warning flags that I'm seeing, right? And these are subtle, that can sneak up, so this is key. The two warning flags: one, credit, HYG specifically. The further it is away from 80, the less I'm likely to believe the rally. It's not that close to 80, so I would have to watch it, right? You have to see it climb closer to 80 to make the rally believable. Point one. Point two is that the VIX is sub 15 and very oversold in the short term. Normally that means it has to pop before it goes lower again. If the VIX were to have a quick pop, that usually entails that the market has a quick flush before it goes higher. So be very aware of those two potential issues into next week. In terms of some stock picks here, I'll bring you 3. So, and I'll try to give you the best stuff that's come up in the room. So, in terms of the regional banks here, this one looks very nice. It is a max bull with a squeeze showing up all over the list here. This is going to be USB. You can play this one through USB, which I think is probably one of the cleaner charts. You can play it through KRE, which is the ETF, which is how I'm playing it, although I think USB looks better. So USB is a trade that's in the room, and I think it's a good one. HPE is another one that came up, and Taylor's trading this one in the room. I think this is a very clean looking pattern. If you look at AVGO, Broadcom, it actually has a very similar pattern. So, you know, maybe there's a trade there for both of these, but again, just looking for max bull squeezes that have a nice pattern, and frankly that really show up on this list. So actually I buried the lead here. This is probably what you want to look into this weekend for yourself. So this is where I'm getting my picks from, which is the squeeze focus list. Here's the time frame, this is the composite score, and this is the rationale for the trade. So I brought you USB, which is a high ranking stock. We looked at HPE, which is another high ranking stock, and then lastly I'm going to show you ANET, but frankly, you know, this list has been automatically curated to be the best list. So let me know if you like anything there, or if you think it all sucks. If you're buying ANET puts, I want to know. So ANET here down 4, hurting my feelings a little bit, just a bit, but it is still fine, I think. We'll see. I don't like this trap, so you know what? Let me kind of punt on this one and bring you a different one. Which one do I like more? Because ANET's showing a pretty good trap. FTNT might also be having a trap here. I'll just bring FTNT. I think that's fine. Although ANET is very high on the list, and ideally I'd like to see it recover before next week. So FTNT here, again, just kind of rinse and repeat the setup, right? Just looking for max bull squeezes, nearby zones, right? So FTNT here, if I look at the sheet, it actually is part of a very strong group, which is cybersecurity. So cybersecurity remains the strongest sector on the board, and this is the name that's leading the whole group. So that always has a good ring to it, I think. So that's the watch list. Those are the squeeze tickers. That was the daily brief. If you got a chance to read it, if you wanted to, pause the video. And I think that's everything. So hope you guys traded well this week. Have a very good weekend. And if you enjoyed the video, drop us a like, drop us a comment. It helps with the engagement. So completely free. Drop us a like, drop us a comment. And I'll see you for the video next week. Cheers. Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.